Well, with President-elect Joe Biden nominating his economic team, what do we know about this economic team and what will they mean to the economic recovery? We'll go now to Scott Garliss, the editor of the Stansberry Newswire, for his analysis. Scott, good to see you.
Thanks for having me, Jess.
So, what is your take on this team? We've got Janet Yellen for Treasury Secretary, we've got Neera Tanden at OMB, and a number of, I would describe them as more progressive Keynesian economists at the helm of the economic apparatus at the White House. What is your take on sort of the approach that they're going to be bringing to the economic recovery?
Sure. I think end of the day, their focus is going to be spending on more to spur the economy and get growth to pick up even more. So what that's going to mean is if you're an investor in the stock market, that's going to be a good thing because it's probably headed higher.
Now, there's obviously two ways to stimulate the economy, right? There's the congressional path, and then there's also the monetary path that comes through the Federal Reserve. We also are hearing from Federal Reserve Chief Jerome Powell consistently that he sees limits on the role that the Federal Reserve can play in the economic recovery. I want to have you listen to what he said in front of the Senate on Tuesday.
I think that the Fed has a contribution to make there. It is not the principal contribution. I think that really fiscal policy and Congress has, and the private sector too, have very important roles there.
What I want to get to is this. If we have a lot of pressure to stimulate from this economic team, and we have the Federal Reserve Chief saying, look, I can only do so much, are we inherently going to have a conflictual relationship between these two apparatuses of the federal government at a time when we really need everybody to be singing off the same page of music?
Sure. I think there's definitely going to be conflict. I think Biden's team is, they're probably nervous about this Georgia Senate runoff. If they don't win both of those races, they're not going to have control of the Senate. So that's going to be a big deal in terms of the stimulus they want to introduce to the economy. So one of the next best options is going to be to have the Federal Reserve do the job for you. And they're going to want Powell to step outside the box. Powell isn't necessarily that guy. So that's where we're going to see conflict arise, and that's going to make it very interesting.
Yeah, another area where I think he continues to push back is in the area of how to stimulate small business. We've had a lot of conversations about what to do with restaurant workers and the hospitality industry, and an industry which has really been decimated by the shutdowns having to do with the pandemic. He said on the Hill on Tuesday that we really need to be focusing on grants, not loans.
Some of these businesses, what they need is fiscal policy, is a grant to get them through this last bit of the pandemic, rather than borrowing more through a Federal Reserve facility.
Why does it matter to the economic recovery? And is this yet another place where we could see conflict between the two economic stimulus philosophies?
I would actually think that there wouldn't be conflict on this one. The reason why is grants versus loans. Yeah, the grants can be forgiven, so none have to be paid back, versus a loan does have to be paid back.
One area, Scott, that you and I have talked a lot about that Powell really seems to have an emotional opinion on is the impact of this economic downturn of unemployment on low-wage earners, minorities, and women. He has repeatedly lamented that they were the last to rise and they were the first to fall with this shutdown. And yet the policy that the Federal Reserve is pursuing right now cheapens the dollar, and that has a really bad long-term impact on exactly those types of workers. What is your take on how all of that plays out over time, and sort of when Powell or whoever's running the Federal Reserve down the road needs to sort of pull back the reins of all of this easy money?
One of the problems that the Powell and the Fed were facing back in March was if they didn't do a lot to stimulate the economy, they were looking at potentially bread lines in a Great Depression-like scenario. So they didn't have a choice but to sort of open up the floodgates, so to speak, and put a lot of money out there to prop up the economy. They did that. It's worked. Now we have a coronavirus vaccine coming down the pike. So there's a time horizon on when things get better. And it's looking like we're going to have broader access beginning in potentially April of next year. That's a good thing. That means these service industries that have lagged, like the restaurants, cruise lines, airlines, hotels, they can all come back in a big way. And there's probably a lot of pent up demand to use those things. But the problem is that as we push more and more money into the system, we're creating this bigger and bigger gulf between people that have been able to invest in those assets like stocks, bonds, gold, cryptocurrencies, and those that haven't. And the problem is those that haven't are solely dependent upon that money they're bringing in the door from daily income. And as you cheapen the value of that, you're making it harder for them to subsist. And that's a bad thing. So Powell is very cognizant of that. And that is why Powell has said, look, right now we can't worry about the balance sheet, but there is coming a point where we're going to have to worry about the balance sheet. And whoever takes over after Powell has to be cognizant of that as well. Because if you don't, you're going to push things to a boiling point somewhere down the line where it's not going to work anymore, and the whole system's going to have to change, and that disruption could be ugly.
Yeah, so you would definitely say that the Federal Reserve is conscious that it is widening the wealth gap with the current policy it's pursuing.
Correct.
Okay. Scott Garliss, where do we find out more about what you're writing these days?
Sure. So check out stansberryinvestor.com. Check out all the free stuff we have to offer that you can sign up for. You can also check out paid stuff there. We also have our real-time news updates. So again, stansberryinvestor.com. Check us out, sign up. We're there to help.
Thanks, Scott Garliss of the Stansberry Newswire. Always a pleasure to see you. Thanks again.
Thanks for having me.
And if you'd like to catch up with more Stansberry research content, please check these social media channels and find us. That's all for now. Thanks for watching. I'm Jessica Stone.